how would you like to make your first million? And today we have Dave Foster joining from Florida. Wow, enjoying the nice weather. So Dave Foster is a qualified intermediary QI for 1,031 exchanges. Oh, wow. And founder of the 1,031 investor. As a multi-industry visionary, he has over 25 years of experience working in all phases of real estate investing and bring his client a fresh perspective and clear vision for strategic development using tools in the tax code such as the 1031 exchange and the SEX one-to-one primary residence exclusion. So as an investor himself, he views of each investment is a unique opportunity to maximize returns. So tell us, Dave, this is right in your backyard. What are the 5 steps that you recommend entrepreneur in order to make the first million?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Yeah, when you read my bio, you realize that where I have made my mark primarily is in a very quiet and very, very boring section of real estate. So there's nothing exciting about this.
Yeah. I was reading it. It sounds so strange.
Real estate tax law. How can you build a business off of that? But as I was pondering, you'd sent this over and said, I'd like you to tell me what you think, Dave. The very first thing that came to my mind was what I did rather than thinking about what you want to do, what you're good at, what your driving desire to be known as is. The first thing you have to do is identify a problem. There is no problem in the world that people will not pay for a solution. So in my case, it was as simple as people don't like paying real estate taxes in the United States on their profits. So too much money goes to the government.
As far as I know, we have the same sentiment all over the world. In London, we have the same.
Exactly. It's kind of funny. The two things that people like to brag about, they brag about how little taxes they pay, and they brag about how many taxes they pay. Whether you're getting away with not paying much or whether you make so much that your tax burden is so heavy. Those are what people like to talk about. So in my case, it was from my position as a real estate investor, I felt that very keenly. And so I identified my problem, tax dollars, and how we can make more on real estate by paying less in taxes.
So step number 1 would be, Dave, like you described, identify a problem that people are ready. So then once you have that step 1, you identify a problem that people are willing to pay for. What you do next? What are the step 2, 3, 4, and 5 in order for you to get the first million?
Right. So step number 2 is simply the exact opposite. Once you've identified the problem, or as Steve Jobs used to once say, people don't know what they need until you show it to them. So you've got to show it to them, or you've got to then find the answer to the problem that people have. And again, in my case, I kind of arrived at it in a backwards way, because the worst mistake I ever made in my career as a real estate investor was my very first project. I bought a piece of property, I fixed it up, I sold it, I made a bunch of money. And then the government came calling. And I went, wait a minute, this does not seem fair. I worked for this money. Why do I have to pay it? So there was my problem, identified. And some good friends of mine who said, Dave, you should have done a 1031 exchange. Well, why? What is that? Well, the 1031 exchange allows you to sell investment real estate and then buy new investment real estate and not pay tax on the profits. Well, there's my answer. I've identified the
Dave, can
problem,
you repeat
and
that
there's the
because I
answer.
lost you? Yeah, Dave, can you repeat that because I lost you when you were sharing this in the audio? Can you repeat it?
Yeah, absolutely. So the 1031 exchange allows you to sell investment real estate and then buy new investment real estate and not have to pay tax on the profits from your sale. You use the taxes to invest in more real estate. Well, that was the answer to my problem. Instead of having to give it to the government, there's an actual legal process that I can use that's going to allow me to use that tax for my benefit. So I was compounding my profits from day one once I figured that
Wow.
out. But I identified the problem and then I had to find the solution. Unfortunately, the solution, finding that cost me a little bit of money, but it's paid dividends in the years since.
So then step number 3, what would be?
So step number 3 is you bridge the gap, right? I've got a problem. I've got a solution. Now, in my case, there were two things that had to go into it. First of all, for myself as an investor, how can I use this process of the 1031 exchange to help me? But then, secondly, as I was doing it for myself, I realized, wait a minute, this is good for everybody. So, how do I between problem and solution? So, learning how to use it, which was easy because I was doing that myself. But then, secondly, learning how to develop that process for others. So it's looking across a gorge and you're on one side, there's where you want to get to on the other side. Now you build the bridge in between.
Okay, and then number 4 and 5?
Well, 4 builds on that because as you're engineering the steps in between, you've got to make those steps action specific. I'm sure you've seen a lot of people fail in their businesses. I have as well. Friends, family, they've got a great idea. They've identified the problem they can solve. They've identified the solution. But then in building that bridge in between the two, they don't make it about what the bridge is. They make it about how quickly they can get across the bridge. And so the bridge either does not get built well or they're unable to make their artificial timestamps. And so instead, I look at it and said, this is task oriented. Building a business is not about time. Building a business is not a microwave, it's a slow cooker. And you've got to put the ingredients in when they're right, not when you want to. So you've got to eliminate time so you can have the long view and look at product and what you're putting together.
And the last one?
Is, Harry, you have to find the buffets or the watering holes of the Serengeti. What do I mean by that? There's a very famous political cartoon from the 70s and 80s called The Far Side. And one of the pictures in The Far Side was simply a shot of 2 cheetahs on a hill above a lake. And all of the zebras and gazelles and other animals are gathering at the lake to drink. And you see the cheetahs putting on dinner napkins. And the caption was called Watering Holes of the Serengeti. Because the cheetahs knew we go where dinner is. So, watering holes of the Serengeti means finding your market with the ability to build customer avatars based on criterias and the problem and what we know. And you build that avatar, but then your next step is you have to go find those people. Now, in my case, again, thinking about my business, who's my avatar? Real estate investors, right? From all over. But how hard is it to concentrate your capital and efforts to find real estate investors wherever they are. Instead, I found the watering hole where all real estate investors go. Because in the United States, every real estate transaction must use a closing attorney or a title company to handle the transaction. So instead of going and finding the investors, I located the title companies and real estate attorneys. So in making one friend, I could impact and make 1,000 real estate investor friends. So it's all about concentrating efforts to find your market.
Yeah. So making money, become a millionaire in property is easy. Dave, out of the 500 millionaires that we interview in this podcast, 1 out of 5 are property investors and property millionaire. However, my first business was in property as well, and we was doing something in London. We call it rent to rent. We rented a unit and a property, and then we rented individual the unit.
Oh, sure, like arbitrage is what they call it here.
Yeah.
Rental arbitrage, yeah.
But then real estate is very good, but when something goes wrong in real estate, it's expensive. So tell us the good, the bad, and the ugly of being a real estate investor. Is it really that easy, or why do you think that I'm gonna give you the statistics? Okay, this podcast, 500 millionaires, 1 out of 5 real estate investors, 1 out of 5 the other people or entrepreneurs that come into the podcast. They are sales, marketing companies, financial planning, investors, VCs. But 1 out of 5 are always property investors, property millionaires, and 1 out of 5 also tech. So these are the dominant industry, right? So why do you think that property is such strong vehicle to build wealth? Well, that's what statistics this podcast reflects. And but is that easy? Tell us the good, the bad, and the ugly.
One of my mentors once told me, and you're absolutely right, it's easy to make money in real estate. It's hard to keep your money that you make in real estate. And that's where people they get excited
because eventually something goes wrong, right?
Exactly. Are you prepared for not if, but when it wrong? Now, the global financial crisis that really hit us hard in 2008, and it rocked a lot of the world, was a credit crunch. None of my investors who were under leveraged lost a penny.
Oh, wow. That's very impressive.
It was only people who were over leveraged. So the first thing you got to do is be disciplined. Think about
Dave, can you define over leverage so people can understand?
In general terms, at that point in time, if they owed more than 50% of the value of their properties, they ended up having to sell those properties to pay the mortgages on their other properties. And then once that starts, there's a chain reaction because then you have less money, but the debts are continuing to grow. And if you've got enough money in the bank that you can float your rents with no income for say 5 to 6 months, and that your debt does not exceed 50%, it's an arbitrary number, but it's one that we've seen work really well. 50% of the value of that real estate, then even if that real estate were to lose 40% of its value overnight, you can still sell it and make a profit. You just don't make as much. And that's where my savvy investors found themselves, is they were able to still sell properties and make money because they weren't over leveraged. I had a couple who were having to go to real estate closings where they would sell properties. They had to write a check. Not only did they not make money, they had to write a check. Now, that's not a good way to make money in real estate.
What your in investment, right? Where do you that is the best places in United States to do real estate investments and why?
If I were to tell you that, I would be giving you yesterday's news.
Ah, very good answer.
Nobody really knows. Now, the real estate cycle in the United States, and I would imagine worldwide, is very consistent and very predictable, not in timing, but in order. So I could look at this. I've been through what, almost 3.5, 4 full real estate cycles. And I can tell you that the first thing that starts to pop in a real estate cycle are your areas that are heavily populated and areas where there's a lot of pre-existing construction. Because single family homes and already constructed properties are cheaper, and places that are populated are going to start their regrowth much more quickly. I know that then it becomes multifamily and it starts to move into tertiary markets. Like when a lot of my investors left San Francisco in 2014, 2015, they made a ton of money in Silicon Valley. You know what they did? They did 1031 exchanges and followed this guy named Elon down to Austin, which was just a sleepy little college town. And now what's happened in Austin, Texas? It's the next hub for all kinds of innovation. So those are the kind of things that happen next. Commercial rebirths during that time, people start to look into formerly undeveloped areas because that's where corporate money goes. Whether it's Hyundai building a new plant in Birmingham, Alabama. And those are the kinds of things. And then, of course, always look for what I call cones of investment by the federal government. The government puts money in places where they want to grow. So if they're investing $1 billion to build a bioterrorism facility in Manhattan, Kansas, you better believe that's a good place to put your money.
Yeah, 100%. And then they tell us and this is important that what you specific niche, finding your specific gap in property, right? I remember the one a property investor friend of mine. We were working in London once, and then he told me he saw like $2 and he saw one house or one unit in the middle that was lower. I told me, Harry, you see this unit, so this unit in the middle, on top, he has something that called airspace. So what that means is that if you buy the property, you can go higher and build 2-3 floors as long as high as the between, because there is a law, there is a section that allows this. And of course, this 99% sure, when I'm 99% sure that the owner of this property doesn't know this. So sometimes this inside knowledge, this inside hack within an industry that you can build the business on, right? Or my one was, it might even was before Airbnb. I mean, this Airbnb, when it started, we were doing this short-term accommodation for years, right?
Were you doing Airbnb in Miami?
Yeah. No, I was doing all this in London.
In London, okay.
In London, yeah.
Gotcha.
So what I said, we were even long before even Airbnb. Actually, when that recession happened, right? Sometimes the recession comes opportunity. So this is what we built my business in 2008, around that area. That's what happened. Everybody lost a job, so nobody could afford the rent of the full house anymore. So they only can afford rooms, and then on the other hand, the landlords, they were all empty because of the same reason. Everybody lost a job, so they cannot rent their house anymore. So then I went to a landlord and said, look, if I rent your house, yes, you give me a good price, and then I will take care of it, and then I fixing up the houses, making very nice, and then I brought the tenants right the full house because they couldn't afford it by renting by the room. So sometimes And talking about real estate cycle, there was a specific cycle of the real estate, which is okay. You have a credit crunch, and I call it in property winter. The winter is when the houses are cheap out there, but everybody's so scared that the bank doesn't want to lend any money, and yeah, if you have money, it's good for you because you can buy a lot of property very cheap. But you need to have it in cash because because it's a recession, the bank is scared to give you the money because it's fear. So and then but winter doesn't last forever. Then it comes spring when the prices, the economy recover a little bit more. So then now some money comes. Yeah, the state that I hate most property is the summer, right? When prices are high and everybody are buying even more that the house is worth and things like that, which is actually happening in Miami. I've been told that when COVID they opened the doors, everybody, the whole United States came here to Miami because it was open, and then people were even paying even 40,000 on top of the property value just for buy because there was not enough stock and everybody was buying like crazy, like the buyer's market. And again, we got winter and things like this. So, Dave, which cycle do you think that Florida and United States is at the moment in the property cycle, and why, and how long do you think will take until we move to the next season?
Yeah, this is when this market is more of grinding to a halt rather than going off a cliff. And so it's made it a very interesting market because it really hasn't been a precipitating event to cause the downturn other than the post-pandemic inflation, which caused interest rates to rise. And that has created such a gap between wages and affordability that it's not just a question of I can't buy investment real estate. It's a question of I can't rent. And if I can't afford rent, investors are not going to buy rental properties. It's been 3 years since I bought a property. We're just sitting, keeping cash, gathering cash for when that time comes. Now, those are all signs of a very mature market. Commercial real estate went through its downturn. New construction went crazy. Now, new construction has shut down. But with the latest moves by the federal government of the United States to ease money, to lower interest rates and borrowing rates, we're starting to see some rebirth. Every little point that that interest rate goes down, there's going to be more people who will be able to buy, more people who are able to rent. So if the Fed keeps their course, my prediction, right? It's free and it's worth every penny you're paying for it. My prediction is that over the course of the next year, we're going to see interest rates drop maybe another point in real borrowing. And when that happens, we will see the market not ignite, but we will see it start again.
Mm-hmm. It's a little bit slow now, right?
Well, yeah, there's places even in Miami. There's a lot of Miami that's dropped by 30%. That's a lot for any market.
Well, which one is a new construction or?
Yeah, new construction. Single homes are fairly stagnant. New construction, we're seeing builders offer all kinds of incentives everywhere. So, nationwide, I think everybody's just kind of waiting. There's a lot of pent-up demand. There's a lot of cash. We're just waiting. And what that tells me is that we're probably going to see the market start to move again next year. I just don't think it's going to be this meteoric rise.
It's always slow. It's never as fast, right? And it goes gradually. I love property, Dave. Yeah, it's I love property. I'm very grateful for property. It's allowed me to everything that every crazy idea, every business that I open, it's always the property business there.
Well, it's the single greatest way that any individual, no matter how much money they have, can make it. Look at your story. You did not need a penny to go and rent those apartments. You were solving a problem.
Mm-hmm.
You didn't have to even buy the real estate. So
Mm-hmm.
with very little money, you were able to
Mm-hmm.
create a business.
Mm-hmm.
Here in America, one of the other parts of the tax code that I deal with
I only
is
bought
Section
3K.
19.
I bought 3,000 pounds only from the bank
That's it. Yeah,
because I got
exactly.
that's give me the deposit and the month rent for the first property. And as soon as I rent the units, they give me deposit on rent. So that's it. And then next month,
Yeah,
the cash flow, it was coming. It was amazing.
yeah.
Yeah.
Here in the United States, all
But
you
then
have to
the
do,
cycle of the property turns around, okay? And when the readjusts again, that everybody find a job again, that everybody have money again, now it doesn't work anymore. Now the landlords are telling me, Harry, or you pay me
right?
premium price for the rental of this property, or I rent it to someone complete because everybody can afford now. So the cycle got me at the end.
Yeah,
It
you
was
got to know where the
amazing at
cycle's
the
at.
recession. So you need to know your cycles and you know what to do, Dave, in each cycle. So Dave, tell us about this, to do in each cycle, which is something that, for example, the cycle that we are now in Florida, what would you do? I think it's actually
Well,
opportunity. Okay, you go,
yeah,
you tell us. What to
uh,
do in each cycle? Should be
right.
doing each cycle because people need to know that the strategy change in my experience, okay?
Always
Because
changes.
I've been exactly. You cannot do the same thing all the time when you are in real estate because the cycle change, right? So you have to
Right,
move with the flow. I learned this in the hard way. Yeah, it cost me a
right,
lot of money, lose a lot of money because, but now we having that conversation because we know what happens. So tell us what doing in cycle and why.
right. Well, there is never a bad time to buy real estate,
I agree.
but there are bad ways to buy real estate at certain times. Like I mentioned just a few minutes ago, I had a piece of real estate in 3 years. We're just sitting tight, building the war chest because that time will come. And that's what I view this part of the cycle as. This is a time for you to prepare yourself. Now, you prepare yourself in three ways. First of all, you never stop shopping because you're always wanting to learn
You
how
always
to
should be. Yeah.
refine offers, develop offers, look at parts of the country, look at different sectors. Always, always, always be a student of real estate. And the way to do that, practice. Secondly, you need to develop your borrowability. And you're going to develop your borrowability by shoring up your portfolio. Right now, our investors typically are selling because they're consolidating from multiple small properties into fewer larger properties where you can get more dollars per door or you can get scales of economy in how you manage them. So that's one big way. And the other thing our investors are doing is they're starting to carve off their low performers, whether it's properties that they're not getting great rents on, or whether it's properties that are older that there's a lot of risk of upcoming capital expense for repairs. One roof can wipe out 5 years of cash flow. And so, what our investors are using the 1031 exchange to start to sell those problem properties and consolidate into fewer and bigger ones where there's also more equity. And more equity gives you more borrowability so that they're going to be prepared when they're ready to pounce on those properties in the new year.
So basically, yeah, getting ready to increase the borrow ability. So when the time comes, they can start to buy property again. So when the time comes, what will happen when the time comes? Interest rate has lower, right?
I think interest rates need to drop just a little bit, but I'm not sure that it's going to take too
Well,
awful
if
much
the
because,
interest rate drops and the prices drop, but the prices in the at least in Florida, from you said, only the condos, right? The buildings have lost, but
yeah,
the
condos are a different animal with the hurricanes and all of that, the HOA things.
so
Um,
those one that lost the 30%, Dave,
right.
in
Yeah.
which one was this one? The flats or in certain areas of Florida?
Well, it's a combination of the hurricanes, along with there was that condo was at the Sunrise, I can't remember the name of it, in Miami 3 or 4 years ago, where the HOA wasn't prepared for it, and actually a few people died. Well, those
Mhm.
kinds of things have HOAs scared to death. So they're over budgeting for things. And it's just, yeah, it's a rough go for that right now. But I'm that it's going to take that much more of a lower interest rate. We're seeing real wages grow significantly. The reports are coming out. As wages grow, people can afford more. When people can afford more, they'll be in more of a market to either buy or they'll pay more rent. And when that happens, if you own the real estate, you're going to ask more for it. So it's
Mhm.
it's all that cause and effect that's going to be there. We've been out of whack, and all we're doing now is consolidating the industry so that now it makes more sense.
Yeah. So we said that we are heading to spring.
Exactly. Winter's almost over. The
Winter is
tulips are
almost
pushing
over,
through.
but still we're in winter, right?
I think we're still in winter. Yeah,
Yeah. Okay. But it's almost over, right?
that's
So
what I.
so then they if someone is for the young entrepreneurs or for entrepreneurs that we when we talk about this conversation here, like even if you're another business or all the wealthy people in the world, they're on property. It doesn't matter what business you are, uh, you should at least learn a little bit about property and try to invest at least small so you get the idea. I think that property is easy, right? Everybody can understand because everybody live in a house, so everybody have a landlord, have to pay rent, things like that. So the vehicle is easy to jump in. We always say to entrepreneurs like, don't put your eggs in your basket when you're making money in your own business. Better to, if you're making money in your own business, reinvest all that and reinvest and reinvest and reinvest. If that's all business, you can do something with the business. With that business, maybe you can buy a property, pay the mortgage and everything. The money that is profit, you can take the money and reinvest in marketing for your business. And in one day, your business, you go out of business, at least you have the
Right.
that will say so. Don't put your eggs in basket. Learn how to become an entrepreneur and an investor because Dave, there are two parts of the equation. One thing is being a good entrepreneur. That doesn't mean that you are a good investor. There are different things, different skill sets. You are particular that you are both. You are an entrepreneur, but also you are an investor. But out there, they have the ability to make money and the ability to keep money. There are two different skill sets, and usually entrepreneurs are very good at making money, but when it comes to invest it and to keep the money, they just don't know because it's a different skill set. So, what is your advice for entrepreneurs?
Right. Well, I would say the key difference in my mind between investors and entrepreneurs is that an investor, by nature, makes their money and their people work for them. When I invest, I'm investing my money either to buy real estate or to a company, and they work for me. So I'm investing money to do that. An entrepreneur starts out investing spending their money to build a job. Very, very different. A job for them to do. And there's nothing wrong with that. Finding a problem, finding the solution, creating the mechanism that solves that is awesome. But there has to be a switch at some point in time where you are no longer creating a job for you to do. And now you are creating a job that others do for you, whether that's through transitional hiring or, like we just talked about, using the money to have people in real estate work for you. And when you do that, Harry, you'll be doing what I call compounding the interest, the investment. When I invest in real estate, that real estate grows, but I don't take, or I take as little as possible of the profit. because I want to reinvest so that then I make money off of the money I made. And then I make the money I made on the money I made. An entrepreneur starts out working for $1. And if they're not careful, they're still working for $1 5 years down the road. You've got to transition to becoming an investor or thinking like an owner of the company and not an employee.
Yeah, because at the end of the day, what happened? We have also this story that the entrepreneurs exit the company. They get few millions out of this, and because they don't know about investing and they haven't learned how to become a great investors, sometimes they give it to a financial planning company, and after a year or two, a lot of zeros are missing, and they don't understand what's going on, or somebody comes and tell you, look, I have this amazing deal, property, this new building, you're gonna get 50% return, and then get off your money, so something like that, and because of lack of knowledge, of lack of, I would say, practice or understanding what is an investment, then sadly they take the wrong decision because they don't know, and they take a hit and they lose a lot of that. They work hard for it, and we want all the entrepreneurs to be wealthy, healthy, and happy. But if they want to keep that wealth, they want to keep this money, how to learn how to invest.
Yeah, think of the entrepreneur as a lottery winner. I make a lot of money. I won the lottery. But what happens to 90% of lottery winners? They're broke within 5 years because they don't have the underpinning to prepare how to hang on to that wealth, which is why my mentor told me years ago, the measure of your true wealth is not how much money you make. It's how much money you keep, because the money you keep works for you.
100%. So, and then, David, somebody's young and want to start business in property, and they are in love with this conversation. How people can find you? How this process works?
Yeah, as we realized a long time ago, what I've really built, although it's a process company that it does this, we're actually at our heart an education company. People have to learn what's available to them. So the1031investor.com, access to our YouTube videos, training videos for free, access to consultations, calculators. We walk people through it because at our heart, every person I can educate is going to be someone who will stay with us and use this process, and they will grow in wealth.
So then, Dave, on any social media they can find you also?
We've got a Facebook page and all the general things. And honestly, I'm somewhat of a Luddite. I don't even know where I'm all at, but my team does. So if you just search for the1031investor.com, you'll catch us everywhere.
Okay, thank you so much, Dave, and for all of you following the broadcast. See you in our next episode of Unstoppable, How Brave Entrepreneur by Dave break the wall and achieve the first million. Bye for now.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.